And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And of course, this is the show where we put you in front of where the action is in the broader markets. And this past week did not disappoint. Let's take a look at what we are going to be covering today. First up, as always, we're going to take a close look at the current markets. Where are we? Where are those pockets of potential strength versus underperformance? And then from there, I will share with you, actually, I will get into this first, some of the more pivotal news items that did impact the markets last week. We'll take a look at how they did and what we can look forward to going forward. And then also how you can take advantage of a move into a newer area, as far as an area that is now participating or certainly on the cusp of broadening out its participation in the markets. So we're going to look at that and some stocks that look attractive. Bottom fishing in the wake of news. And I did talk about a lot of news that did come out this week. Of course, every week we do get news, but not all of it is going to have such a potential, as I stated earlier, impact. So we'll get into that right now. Let's take a look. So last week, the FDA did approve Pfizer's vaccine. Of course, that's great news for those who were potentially holding out on getting vaccinated until that approval came forth. We do want to see the vaccine being matriculated so that the reopening of the U.S. economy can be reignited. And then also China came out with a report earlier in the week of no new virus cases. And that's very big news. China, of course, their economy, a big part of that world, global recovery. So impactful news there. Also today, Fed Chair Powell did come out and confirm that he was on the side, one of those Fed governors that was more inclined toward tapering their easy monetary policy before year end. And this is the first time he has publicly stated that. Of course, no real date in mind yet. But the good news is Powell did make it clear that he's not in a big rush to stop their very generous bond buying activity that in turn has really given the economy and low interest rates quite the boost. So big news there. We did see durable goods increase this week, so the economy is continuing to expand. Second quarter GDP was revised higher primarily because of consumer spending. That's a good thing by all accounts. The consumer with their high saving rate are really on the edge of continuing to spend, which of course is very good for the economy. That move into cyclical areas of the market, that was reignited, and it's all about that global growth, those prospects being improved. So we will go ahead and get into that. So let's go ahead and start by taking that close look at the S&P 500. Here's a daily price chart. And we can see that the S&P 500 did end the week at a new high. It wasn't a straight upward move. Yesterday, we did get a pullback as people were a little worried about what Powell may, in fact, come out with today. But we are at a new high on the S&P, and then the outside momentum indicators, that RSI up here above 50 and trending higher. And then likewise, this faster moving stochastics, this momentum indicator up here in positive territory heading north. So we can see that the broader backdrop is there, and as far as being healthy. So let's go ahead and drill down further and take a look at the 11 sectors in the S&P 500. So this is a view where we are looking at a 2-month daily price chart. I've gone ahead and added that relative strength indicator, sorted it by descending. I'm going to go ahead and update that. So we want to see where the relative strength is within the markets relative to some of these weaker areas. Interestingly, consumer staples have really made the leap, or actually the decline, the drop down to this lower quartile, but despite some of these areas down here currently showing relative underperformance, it's not just a 1 week metric. This is going back over several weeks. We are seeing vibrancy in a couple of these areas. We can just take a quick look at discretionary, for instance. This is all about, again, that FDA approval as far as vaccines. So a lot of those recreational and reopening type trade stocks are on the move. And that's that bottom fishing I talked about. So we're going to take a look at some of the areas there. But let's go ahead. Financials up here in the forefront, a nice uptick here. Financials were one of the top performing sub-industry groupings, and all about bank stocks. Bank stocks led financials higher. So definitely worth noting. This is something we picked up on a couple of weeks ago, and back up here also economically sensitive cyclical area that is doing quite well. Technology, not an outperformer on a percentage improvement basis, but definitely in a leadership place up here at a new high, trending upward. We're going to get into where the strength is in technology, so that of course we always want to be able to participate in that outperformance. So cyclical materials stocks up here in the forefront as well. So there was one area that I did want to share with you that is really coming into, or in the beginning stages of coming into its own. This is energy. Now this chart is not overly dynamic from my work. I'm going to get into some of the reasonings behind this potential downtrend reversal here in energy. We just now have that RSI turning positive. We did have that black line up through the red, that MACD momentum shift upward taking place. So really firming up nicely. And energy is of course, a play on the global economic expansion, growth, people getting back out and increasing their usage of oil. But I did want to point out to you that when energy first came on into its own back here, my MEM Edge report, we did pick up on that move, and we had a couple of names up close to or over triple digits. So when this group gets going, definitely worth taking note. So let's go ahead from here and drill down behind even those sectors, get into some of those sub-industry groupings, again, with an eye toward sorting out where that strength is. So I do focus on faster moving, higher growth stocks. So here again, with this 2-month daily price chart view, I do have software, semiconductors, biotechs, small cap, and so on. We've gone ahead with that RSI. I'm going to go ahead and update it here. And yeah, let's take a look. Up here, front and center is IGV. That is that software. And for those of you that follow my work, you will know that it is an area that I have been all over as far as picking up on this relative outperformance here. A lot of high growth companies, a lot of them reporting very, very vibrant earnings, and most importantly, guiding higher. This move to the cloud that really took shape during the lockdown period of the pandemic is continuing to broaden out and drive a number of stocks in this area higher. So if you're not involved in that area, certainly definitely worth taking note of as far as participating in that. Semiconductors, another strong area near and dear to my heart, if you will, because this is another area when it gets going, you can really experience some nice upshifts here. And semis are an area that certainly are on the move. The group was up almost 6% this week. There's a real significant sub-industry grouping within semiconductors. It's not all semis that are enjoying this nice uptrend here. We can see the RSI trending upward, and then we had that nice MACD momentum shift to the upside here, black line up through the red. So another nice strong area. Hopefully we'll have time to get into some of those names. But for here, I did also want to share with you, let's take a look at the 10-year yield. I talked about financials and that being one of the top groupings. So we can see that the yield on that 10-year, it did increase actually quite a bit this week. We got up to that 1.32 level on the 10-year on the yield. It did dip back today simply because Powell's comments were that they would be decreasing their bond buying, but they're not in any rush. So we did see a little bit of a pullback. Of course, a reduction of that bond buying is going to increase rates, so a little pullback, but generally still potentially heading higher. But more importantly, we can take a look from here because this regional banking index, KRE, up almost 4%. This is that firming up that we were talking about within the economically sensitive area. As the economy expands, lending activity will increase. But here's one other area that definitely wanted to point out. This is Brent crude oil pricing, and oil prices jumped almost 10% this week, and that is the highest increase since back here in October, just prior to this huge uptick in energy prices. So we can see we're back above that 70 level. That's really back here, $50 was the big level, but here psychologically, that $70 level, we're back above it. We have that momentum crossover. So energy for sure is an area of keen interest, certainly for me and for my work. So from here, I'm going to take a very brief break. We're going to take a look, as I mentioned, at some of the bottom fishing. I even have some base breakouts, so lots more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm focusing back again on this daily price chart of Brent crude oil pricing. Thought I'd share with you some of the reasons that oil prices really came in as far as having that biggest gain since last October. And first up, there was actually a big accident, if you will, but in Mexico, one of their platforms, they had a major outage. So that impacted the price of oil as their production would be decreased. Also, there was weakness in the US dollar. Let's go ahead and take a quick look there. We can see here is the US dollar. It did decline, actually down again. This is a daily chart. So as the dollar declines, it will impact commodity prices such as oil. And then today, there was a shutting down of some offshore firms off the Gulf of Mexico. They are preparing for Hurricane Ida. So those were certainly three of the more impactful headline news items from here. Let's go ahead and take a look at energy. This is that first page on StockCharts.com. I'm going to go ahead over to, you can see this is today, but overall energy, the group was up 7.5% this week, but the group itself, you can see this is that StockCharts technical rating down here at 30. So it really was a depressed area, kind of ripe for an uptick given the right confluence of events, if you will. So Let me just go back because what I did want to do is get into the sub-industry groupings here within energy. So we're going to take a look at exploration and production. And from here, I'm going to share with you how you can potentially uncover candidates within energy. So we can certainly see from here that the energy, a lot of those bigger movers are smaller cap names. You can see so they are going to be rather depressed. So what I like to do from here with that stock charts technical rating, let's take a look at a couple of names simply because they're small cap. They will be a little more volatile, but definitely worth taking a notice of. So let's take a look at Laredo Petroleum as an example. LPI is the ticker. It's about an $800 million market cap. But what we are seeing is that the stock pulled back to this 200-day simple moving average. Now I'm pointing this stock out because unlike other energy stocks, it continued to new highs well into July. Let's just take a quick look at the energy grouping, and you'll see for the most part, it peaked back here in May. So I like the fact that it continued to power to new highs. It tells me there's our underlying dynamics that are strong. And then it did have this significant pullback here, but it seemingly found support around that 200-day simple moving average. We can see the stock, it's had a very big week. I'll be honest, it's up 12% today. It was up over 35% on the week. But what I wanted to do is just go back here and provide you with historical precedent. And this is particularly true of these smaller cap energy names. They are going to be certainly a lot more wobbly, if you will. You need to put your seatbelt on, but when they get moving, so back here in December, the stock was up at this juncture about 32%. It had another day where it was up 17% beyond that. So would not let that outperformance last week really put you off. We can see the momentum indicator black line up through the red, and then your RSI just turned positive. So we're at that 52.5 level. The next possible area of upside resistance is 61. So we are going to want to see a break back above that to confirm or certainly give confidence that there is further upside from there. So let's go back to this list. I did want to share with you another way that you can conceivably get in front of candidates. And again, this is just one of those sub-industry groupings. I'm going to sort it here by that stock charts technical rating. Generally, these are the names that have already gone as far as broken back above key areas of resistance. First up, another smaller name. This is Penn, Virginia, PVAC. Another name that extended its gains well beyond the overall broader market group. We can see it pulled back to that 200, but unlike LPI, it has broken back above each of these possible areas of upside resistance. Very nice volume here today. So we can see that the stock could conceivably advance higher. We're using this, I would use this early May period as precedence of the potential upside there in this particular name. So from here, let's go ahead and move on to other areas that I did want to go ahead and share with you. I talked about that concept of bottom fishing, if you will, and it is going to be news related, but I'm going to share with you what you want to see, and it's similar to what we did just experience. I talked about leisure and some of these travel related stocks that are moving upward, and a lot of them are from super depressed areas. This is Wynn Resorts, and we can see this significant break from 135 down to about 87. Very, very significant drop here, and we can see that there it is potentially in the beginning throes of reversing that downtrend. The news here is that Macau in China, a big, huge gambling hub, they did ease their COVID rules. There was a period where you had to have confirmation that you tested negative over the last 48 hours. They've expanded that to the last 7 days. And WIN as well as LVS, those two are big players in Macau, both of them attempting to reverse. But when I look at LVS, this significant decline from my experience is going to take quite a bit of time to reverse. WIN might have a little bit easier of a time, but I am going to want to see a break back above each of these moving averages from my work. Now, others of you that are it's enough to see the RSI turn positive, and we had that nice positive crossover on the MACD. You could conceivably try to get into this with knowing that the red 50-day and then this blue 200 are potential areas of upside resistance. And again, you are going to want to use historical precedent when we have that break back above the moving averages, back above resistance on volume with outside positive momentum indicators. Your odds are quite a bit greater. Let's take a look at another stock in that as far as the gambling area that is looking a little more attractive, a smaller stock. This is Century Casinos, CNTY. This gap up here that took place in the beginning of August was all about very strong earnings. And then, of course, it subsided. Delta variant was spreading, so it did pull back, but it is recovering quite nicely. Your outside momentum indicators are positive, so something of interest to keep an eye on. Now, another area that I did want to mention to you is kind of a repeat of last week. We talked about how earnings season, let's go ahead and take a look at Lowe's had pulled back going into their earnings, and then subsequently, when they reported strong numbers, had a nice upward move, as opposed to stocks that had rallied going into their earnings. So that same phenomenon did take place last week. This is a stock that we talked about on last Friday, and that is Dick's, DKS. They came out with super strong same-store sales, really guided higher well into 2022, and we can see that gap up. So what I wanted to point out to you is how you can use historical precedents is another piece of the puzzle that you can use if you are looking for potential stock candidates. Either I wouldn't be a buyer right into earnings. That can be a bit risky. Perhaps you can use options that can protect you or get in a little bit earlier. But historical precedent is going to help. So with that in mind, I was going to go ahead and share a stock that is due to report next week. And let's take a look. This used to be a super well-known name. Some of you may be familiar with it still. It is Sienna Telecom. And here is that historical precedence here. The stock gapped up on earnings, broke out of a base. Now, unfortunately, it did not advance higher beyond that. So more it would be to be on the lookout for that gap up. It's going to be all about their guidance going into next year. So they are due to report next week. Keep that in mind. Another stock that I shared with you last week, and it was that concept of pulling back or being depressed in price, if you will, prior to earnings, and that's Palo Alto. And we can see that the stock really had fallen out of bed in line with other software security stocks, came out with great numbers, and take a look, a big gap up. So I was going to go ahead from here and share with you a couple of other names that are due to report next week and are in positions, I would say, that are depressed. They're not like other software names that are hitting a new high. This is Zoom Video, ZM, and it's certainly undoubtedly they are not going to be hitting those growth strides that they did during that lockdown period, but something to potentially keep on your radar should they come in with numbers that are remotely of good standing. Another stock that is in the same area as PANW, which is Palo Alto. This is another software security stock due to report next week. OKTA. So it did gap up. It's kind of a sympathy trade relative to that Palo Alto. It did have this nice base breakout, but relative to historical precedent, the stock is still a bit lower priced. We can take a look at another software security stock due to report next week, and that is CrowdStrike, CRWD. This particular stock is certainly at a new high, so it would not hit that precedence, if you will, as far as being in a lower level and poised to take advantage. One last name that did report this week that was similarly to CrowdStrike was at a new high when they reported, and it is ASML. Hopefully I have this correct, because the stock did actually, I apologize, it's MRVL, because the stock was at such a great level as far as already having advanced ahead of the release of their earnings. It was sitting at a new high. The stock did report very good numbers, but it pulled back on the release. So sharing with you that concept that those lower price names going into earnings are tending to fare better when those results are quite strong. So let's go ahead. I just have a little bit of time left here, but I do want to share with you names that have had base breakouts this week, and we can talk about why. So first up, let's take a look at JBHT. And I did not take a close look at transports, but certainly these stocks, transportation stocks, when we're talking about the economy expanding, the need to move purchased goods is going to be there. So let's take a look. JBHT had a very nice flat base breakout on its way to an even longer multi-month base breakout, which would be quite ideal. We can see the stock had this today's advance on very good volume, but let me just go ahead and mark this up so I can share with you the actual type of base breakout that this was. And some of you that follow IBD and the O'Neill's work, Bill O'Neill, will be familiar with this concept of a cup with handle base breakout. So when you are on the prowl for this type of base breakout, a couple of things here. The stock price hits a new high, pulls back, forms the right side of the base, but the right side of that base does not make it up quite as high as that recent prior high. And then that breakout is going to be when it breaks above the right side of the base here. So that is what occurred today. We can take a look at another name also in the trucking space that also had a nice base breakout today, and that is PTSI, smaller name in the transportation. Actually, this is transportation services, and we can see that it is also actually on the verge of a base breakout. Let's take a look at another name here. This is Skyline Corp, home construction. There was good news out this week as it related to new home sales, an existing home, and also Powell's remarks that pushed interest rates back down were bullish. We can see SKY breaking out of a nice base, CVCO, another smaller name in this area, but also exhibiting a nice base breakout. And I have one last area that I can share with you here before we close it out for the week, but also industrial and building materials. I didn't mention that Biden's infrastructure plan finally made it all the way through. I think the news may have well been built into the markets already, but a couple of construction names here that you can keep on your watch list. I'm going to leave it at that. For those of you that have not already, go ahead and use that link below to trial my MEM Edge report. It's all about really giving you the fine points as it relates to the markets, sectors, and then of course, those stocks that can benefit from areas that are under accumulation. Everyone have a great week, and I will look for you next week. Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.